Hey everyone, I'm Cary Smith and I'm sitting here with Cheri Turner. Cheri and I are both with Client First Capital. And today, Cheri, I just really like our topic that we have today because I think it's going to help so many people who are finding themselves in this particular situation. And so,
Right.
what we're talking about today is what to do if you're retiring in a down market. And when you're
Mhm.
retiring, typically you're excited, you're looking forward to what's next. But at the same time, if you're retiring in a down market, at the time that you need that portfolio, which you may have been saving, for 30 or 40 years building up your retirement fund, and then when you need it, the market's falling and you have less money out in there. And so um, so that can cause some worry, or at least for people to
Mhm.
re-strategize their retirement. But there's some good news here also, and the good news is there are some strategies that can help you have a successful retirement, even if you're starting off in a down market. And so,
Definitely.
yeah, so let's jump into this topic, Cheri. I think you have
Sure.
a key point that you wanted to bring up first.
Yeah, absolutely. And we've talked about this a little bit before in previous videos, but the first is to avoid panic selling. So oftentimes people panic and they end up selling as soon as the market becomes unstable. And what ends up happening is all you do is lock in your losses. And oftentimes that costs you the opportunity to ride the recovery back up. So it's very critical to stay calm, to assess your investments, but to stay in the market. And very oftentimes we see that an up market will very shortly follow the down market. So much more easy to stay in the market and wait out the recovery versus trying to time it. And that's what history has shown as well, that the portfolios perform much better when you stay in the market and strategically write it out.
Yeah. It's easier said than done, but it's
Right.
important to have that discipline and not panic. So another one is also within your portfolio, build in a cash cushion. And so,
Mhm.
during your working years, you might have a little bit of an emergency fund, but really your job is providing income or cash flow. So you're not relying on your retirement portfolio just yet. So you may not have that cash cushion. But when you retire, it's important to have that so that you don't have to sell securities at a loss. You have money in your portfolio that's probably um, in a money market fund or a high yield savings account or something of that nature, right? Where that money is safe and can be used for your living expenses. So building a cash cushion is one of the things you want to make sure you're doing within your portfolio.
Right. Absolutely. Absolutely. Another thing that you can do, Carrie, is utilizing a bucket strategy. And it kind of goes in line a bit with what you were just discussing, in that you typically will have a short term, a medium term, and then a long term bucket. Now, in your short term bucket, it is that 1 to 2 years of more liquid assets that are easily accessible, that help to prevent the need to pull from your invested assets in the event of a down market. So having that 1 to 2 years of living expenses accessible and available allows you to be able to wait out any market downturns.
Yeah.
Now, in your medium term bucket, you're going to have probably some bonds and medium term bonds, and you're going to utilize this partially for growth. But then as you use through your short term bucket, you sell off some of your medium term to essentially replenish that. And then, of course, you also want to have your long term, those assets that are invested strategically in the market, in securities, and actively growing your wealth.
Yeah. So those are all good points, and I'm a fan of the bucket strategy as well. And so, another one, and this is something that a lot of people do, and it's a really effective strategy, but it's really just reducing your discretionary spending. So if you were planning on taking, I don't know, a big kitchen remodel or
Mhm.
a really, big extravagant vacation or buying a new car, if you're retiring during a down market, it might be better just to postpone some of those things and do them
Absolutely.
later once the market begins to recover. And then that way you're reducing your expenses, you're reducing the stress on your portfolio, And so that's a key strategy that a lot of people use if they're retiring or living in retirement during a down market.
Right. Absolutely. Another key strategy is to ensure that you're actively rebalancing your portfolio. Oftentimes during down markets, you see different sectors of the economy are impacted differently. And so what can end up happening is it throws off the balance of your asset allocation within that portfolio. So given that you want to come back and you want to reassess and ensure that those are still the proportions you want to be at, and get those back to where they want to be. Regularly rebalancing helps you to ensure that you're staying on track for your goals and your time horizon as well.
Right, very good. And so I'm not going to recommend just staying, in your job and not retiring because if you're getting close, you're probably looking forward to retirement. However, what some people have had some success with is either phasing in that retirement, so staying at the company that they're in, but working fewer hours, maybe reducing the number of projects or cases that they're taking on, and that way they're kind of stepping into retirement, but still have some cash flow and things coming in. Other people will do some consulting or part-time work as well. So there's ways to really begin moving in the direction of being fully retired, but moving in kind of a phased manner so that you continue to have some cash flow. And again, that's going to reduce the stress on a person's portfolio.
Absolutely. Absolutely. One of the last things that I would recommend is consulting a financial advisor. During periods like this, having somebody with experience be able to assist you with things like your withdrawal strategy, like tax optimization strategies, and then really optimizing your investment portfolio. Times like this, it just becomes even more complicated than it typically is. And so having that expertise really can help you to work your way through it.
Yeah, I think that's a really important point, Cheri. So, one, someone who is a professional and does this for a living can often bring a different perspective to the table,
Yeah.
and help you just kind of understand how these events typically go, and
Mhm.
and what a downturn looks like, how long it typically lasts, how long a recovery takes, and so they
Right.
can bring a different perspective and some knowledge. But most likely they've helped tens, if not hundreds of people through this kind of situation in the
Right.
past, right? And so
Right.
their experience can really be critical. And
Absolutely.
so, yeah, so I would say if you're out there and you're looking at the market and you're worried about, is now the right time to retire or not, or if you've made that decision and you're retiring and just not sure how to proceed in the best manner,
Right.
reach out to us at Client First Capital. You can reach us at clientfirstcap.com. And from there, you can schedule an appointment for us to just have a conversation and see if there's a way that we could serve you. Or you can just call us directly as well from the
Mhm.
website. Also, you'll find links to this video and other videos like this, as well as you can sign up for our monthly newsletter if you choose. So again, that's clientfirstcap.com. And then if you like this video, give us a thumbs up so that other people can see it as well.
Yeah.
All right, Cheri, thank you. Good job.
Absolutely. Thank you, Cary.